folks, I'm Loren Riddick with the Loren Riddick team. Let's talk straight about reverse mortgages. See, there's a lot of misconceptions about the reverse mortgage out there, and that's exactly why I'm coming to you right now. You see, there's no substitute for us meeting personally, whether we're in your home or in my office, but I wanted to wet your whistle, I guess you'd say, just to let you know a little bit about what we're doing, maybe help you get over that initial anxiety of reaching out to us, but I encourage you to do so. Got a lot of testimonials, a lot of great clients that appreciate what we've done, and I'm very confident that the reverse is a phenomenal avenue for freedom for our seniors. You see, I thought it was the biggest crock of bull that I'd ever heard of, and that was basically based off of this mentality: fingers and ears and eyes closed. I really didn't understand. You know, if someone came to me and said, "Hey, Loren, why don't you promote reverse mortgages? You're a federally insured lender." Well, I really couldn't give you an answer other than I didn't like it. Well, once I dug into it and I really understood, it made a lot of sense. Two big factors. Number one, I felt like seniors would be giving up their rights to their property. You know, they look out the window and they see buzzards flying over the house, waiting on them to die so they can take over the house. Not true. The other thing is I just couldn't understand how it made sense. You see, as a banker, I understand why a bank makes a 30-year loan, a 15-year loan, a 20-year loan. Someone borrows $100,000, they're going to end up paying $200,000 or $300,000 for it by the time they pay it off. We've all been in a situation where we've done a forward mortgage and, you know, we look down and we see very little going to principal and a ton going to interest. That's never a good feeling. A reverse is a phenomenal opportunity because here's what it does for us. Number one, tax-free money. Number two, it allows someone to get an advance on the equity of their home right now without having to sell their home, move their home, and make a payment. That money can be used for a multitude of things. It can be all up front, it can be done in a line of credit, or it can be done as a monthly income to help supplement what's already going on in your income. The biggest thing about reverse is this. To understand a reverse, we need to understand a forward loan, a forward mortgage. So what's a forward loan, Loren? What's a forward mortgage? It's any other loan you've ever known. Make a certain number of payments and we eventually get to the end. Well, a forward mortgage is opposite of a reverse mortgage. The difference is this. Let's assume that we have a forward mortgage. We're paying $1,000 a month. We know that if we pay $1,000 long enough, we'll eventually get to zero. A reverse is very simple. We keep that $1,000 in our pocket, and now let's say $500 a month in interest is going on. Well, every month that $100,000 loan is going to grow $500. So roughly every year, maybe the payoff from the first year goes from 100 to 106. And then the second year, 106,000 to 112,000, and so on and so forth. You see, if I have a senior and they pass away in 2 years, or something happens and they want to move away, the payoff is a whole lot less in 2 years than it will be if they run it out for a 20, 30-year period. And that's important to understand. So we're only paying for what we use. At the end of the term, what a loved one or an heir will decide, what do they do with the property? Do they retain on the property? Do they refinance it or pay off cash, whatever that balance grew to? Do they sell it and keep a profit? Or do they walk away and say, hey, it served mom and dad's purpose, but it's not a place I want to live, that sort of thing. Well, let's explore that for just a moment. If the loan started at $100,000 and Mr. Jones lives 2 years and the property's worth $200,000 and the payoff is $112 or $110, well, there's $80,000 to $90,000 in equity. Of the three options to keep it and refinance it or pay cash for it, the payoff, sell it and keep a profit, or walk away, there's no way that heir would want to walk away from $80,000 to $90,000. Now on the other end, let's say Mr. Jones lives till he's 100 years old and he way outlived the projections. If the house, you say, well, wait a minute, okay, Loren, wait a minute. If the meter's running, right, and he's been doing for 20, 30 years, couldn't he owe more than the house is worth eventually? It's possible. Here's what's great about it being an FHA insured reverse, which, by the way, is the only one you want to consider. When you have an FHA insured reverse mortgage, two things are very, very important to understand, and it makes you feel great about it. Number one, there's never a debt handed back to the heirs. If that home is worth $100,000 and the payoff is $130 at the end of the time, that $30,000 is forgiven. It does not come back on the estate. That's a great thing. The second thing is, if someone wants to live in the home, they want to retain the property. It's worth $100. The balance is $130. FHA allows that balance to be reduced to 95% of that appraisal at that time, $95,000. Again, the difference between $95,000 and $130 is forgiven by FHA. You see, I can get into specifics with your individual file when you come in to see us. I just wanted to give you an idea of a little bit how the reverse works. The big thing is we pay for only what we use, and we don't give up any rights to the home. And to be able to do things like provide for health care in home. I've never had a senior yet that raised their hand and said, hey, I cannot wait to go to a nursing home. Most seniors don't want to go there. They don't want to be in a nursing home. They want to be in the comfort of their own home. So they want to be financially secure to bring the nursing home or the care to them. Prescriptions. Had many seniors, they have prescription bills $500-600 a month. Or just the average cost of living. A $4 or $5 gallon of milk is tough on a senior with fixed income. So there's tons of reasons. A lot of folks also realize that if you have a free and clear home and you do happen to go to a nursing home, it's not free and clear anymore. The fine print at most nursing homes say that, I know that, for example, when we go do a purchase for an estate, one of the things we have to wait on is a payoff from the state of Tennessee to make sure that that senior didn't have a lien against their property for that regard. So I encourage you to get with us. We'd love to talk to you, give you some ins and outs. Your personal attention is what you need. And I would encourage you, don't delay. Just as we're making this video for you, changes are happening drastically. Changes that will affect the way things are done. Taking options of fixed rates away. Taking options of lower closing costs away. Currently, if a senior has a $400,000 home, they have $250,000. They can get that in cash and they can do anything they want to with it. Now, folks, two key points to keep in mind as it relates to the changes and the marketability of the reverse. As the market declines, in other words, as the interest rates grow, that dramatically impacts, on top of the other changes, the amount of loan that's available. Well, what does that mean, Loren? Well, number one, that means it may be the difference between getting enough to be able to pay off our current mortgage or not pay it off. Or in the situation I had a few months ago, they came in, looked at the deal, they were going to get their home paid off. They realized that, hey, I'm 70 years old and we're going to be 80 something by the time we pay the home off. What good is it to be having our home paid off at that point? They were going to get their home paid off and $45,000. And oftentimes, husband and wife, they weren't on the same page. I think one was more comfortable than the other, and it took them about 8 months to come back around. Well, the only problem was they still were going to get their home paid off, but the $45,000 shrank all the way to $12,000. Pretty significant. And the other thing to keep in mind is that currently there's no income or credit requirement as it relates to the reverse mortgage. There soon will be. And with challenged incomes on fixed income, maybe some bad credit decisions, whether we co-sign for a son or a granddaughter or something on a car that didn't go like it needed to, if credit's messed up, our income's too low, won't be able to qualify for the reverse, and that's huge. It's about to change. They're about to play Big Brother and change it to where, hey, maybe only out of the 250, you can only get maybe 100 of it up front. And then you can get a little more the next year and a little more the next year. I found that most of my seniors like their independence. They like to be able to choose what they do, how they do it, and when they do it. If they want to take their money out right away and bless their grandkids and put it in trust for their college, take everybody to Disney World, or just give them some great gifts at Christmas and envelopes. Flexibility is a key, and we're here to give you that opportunity. Please give us a call today. We'd love to meet with you. You can look to the right. We've got contact information and some great testimonials from folks just like yourself that come to meet our team and realize the freedom that we were able to give them. So we appreciate you. Wish you best of luck in the best of your days, and we're here for you. Have a great day. And that's straight talk about reverse mortgages.